90% of traders who blow their accounts were right about the direction. Let that land for a second. They read the market correctly. They identified the zone, they called the move. And they still lost. Not because the chart lied to them, because they entered one candle too early. One. And if you think that sounds like bad luck, you are still thinking like a retail trader. And that mindset is costing you money every single week. In this video, I'm going to show you exactly what separates a correct analysis from a correct trade, because those are not the same thing. They have never been the same thing. And the gap between them, that invisible gap, is where most trading accounts quietly die. By the end of this video, you will understand why hesitation is not your enemy. And the answer to that is going to challenge everything you've been told about confidence in trading. Stay with me. Here's what the industry sells you. Read the chart well enough, and the entries take care of themselves. Study more patterns. Learn more setups. Master more indicators. And eventually, you'll just know when to pull the trigger. That's not education. That's a distraction. Because the problem was never your analysis. The problem is the moment between analysis and action. That single second where everything you know collides with everything you feel. And feeling, not knowledge, is what makes the decision. Think about the last time you hesitated on a trade. You saw the setup. You knew the zone was valid. You'd done the work. And then something in you said, wait. Or worse, something in you said, now. And you jumped in 2 candles before the confirmation arrived. That is not a chart reading problem. That is a psychological timing problem. And nobody talks about it honestly, because it's uncomfortable. It means the enemy is not the market. It's the story you tell yourself while you're watching it. Most traders believe that more certainty leads to better entries, so they wait for more signals, more confluence, more confirmation, until the move is already 40 pips in, and they either chase it or they sit there watching it go, telling themselves they were right all along. Being right without being in the trade pays nothing. The reframe I want you to carry into everything that follows is this. The entry is not about certainty. It is about evidence crossing a threshold. And learning where that threshold is, that is the entire game. Let's start with what a candle actually is. Because I don't think most traders have ever been told this in a way that stuck. Every single candle on your chart is a completed argument. The open is where the argument started. The high and the low are how far each side pushed before being forced back. And the close? The close is the verdict. One side won. The candle recorded it, and that record is permanent. Now, within that argument, 2 things carry all the meaning, the body and the wick. The body tells you who controlled the session from start to finish. A wide body, a candle that closes far from where it opened, means one side dominated completely. No real contest. Conviction, not confusion. The wick tells you who tried to control the session and failed. That thin line reaching above or below the body is not decoration. It is evidence of rejection. A long lower wick means sellers drove price aggressively downward, and buyers absorbed every unit of that pressure and reversed it before the close. The longer the wick, the more violent the rejection. The more violent the rejection, the more deliberate the response. That is not noise. That is institutional money defending a position it chose carefully. And here is where most traders make the first mistake. They see the wick, they recognize the rejection, and they enter immediately before the candle closes. You'll see exactly why that one habit is so dangerous in just a moment. But first, let me show you the 3 formations that actually matter. The first is the pin bar. Small body, long wick in one direction. A bullish pin bar with a wick reaching down is a story of buyers who absorbed every unit of selling thrown at them and then closed the candle near the top. The wick is the battlefield. The close is the declaration. When that forms at a genuine demand zone, you are not looking at a pattern. You are looking at institution. The second is the engulfing candle. 2 candles. The first bearish, the second bullish. And the body of that second candle completely swallows the first. In plain terms, all the selling of the previous session was not just absorbed, it was overwhelmed. And the traders who sold on that first candle are now underwater, exiting in panic, their exits becoming fuel for the very move that's burning them. That is the mechanics of a real reversal. The third, and this is the one most misunderstood, is the doji. Beginners see a doji and immediately say reversal. That is wrong. A doji means indecision. Neither side won. Whether that indecision is meaningful depends entirely on what came before it and where it formed. A doji after a sustained trend This is the principle I want locked into your thinking permanently. No candle has meaning in isolation. The candle is not the signal. The location is the signal. The candle is the confirmation. This is the principle I want locked into your thinking permanently. No candle has meaning in isolation. The candle is not the signal. The location is the signal. The candle is the confirmation. Price moves in your favor, and within minutes, doubt shows up uninvited. Maybe I should lock in profit now. What if this reverses? I'll just move my stop to break even. And in doing that, in one small, fear-based adjustment, you hand back every edge the entry gave you. The market always tests your entry. Always. It will pull back. It will pause. It will make you feel like you misread everything. And if your conviction isn't rooted in a process, not hope, not instinct, a process, fear will make every decision from that point forward. That is why the entry is not the goal. The entry is the beginning, and the space between entry and exit is entirely psychological. Technical analysis gets you to the door. Discipline is what takes you through it. Here is the shift that changes everything. Most traders ask, where will price go? The professional asks, what would have to happen for me to be wrong? That question sounds simple. It is not simple. Because the moment you can answer it precisely, not approximately, precisely, you have defined your stop. And your stop is not a failure plan. Your stop is the foundation of your entire mathematical edge. Without a defined stop, you don't have a trade. You have a wish with a position size attached to it. The professional doesn't trade levels. He trades reactions at levels. The candle is not the entry. The confirmation within the candle, the close, the body, the wick's relationship to the zone, that is the entry. And the discipline to wait for that close, to not jump at the wick, to not anticipate the verdict before the candle delivers it, that is what separates the accounts that survive from the ones that don't. There are two types of traders in every losing position. The one who entered too early and knew it, and the one who entered too early and called it conviction. The first can learn. The second is the most dangerous trader in the room, and for most of us, at some point, that second trader was us. So what does this look like in practice? Not in theory, in the real moment under real pressure. Before the candle even forms, you've already done the work. You've identified the zone. You know why it's significant. Not because price is near it, but because of what launched from there before. The imbalance, the sharp departure, the level the market remembered. Now you watch. Price approaches. The candles compress. The range tightens. Each bearish candle produces less movement than the one before it. Sellers are pushing, but the conviction is thinning. Effort without result? That is exhaustion. And when supply exhausts, demand fills the void. Then price dips into the zone. A wick reaches down, tests the level, searches for sellers, and finds none because the buyers are already there, quietly absorbing everything. And the candle closes, strong. Wide body, close near the high, minimal upper wick, body, close, all telling the same story. That is when you enter. Not a moment before, not after one more candle just to be sure. Now. And then you trust the process. You don't move your stop in the first hour. You don't watch every tick. You made a decision based on evidence. Let the evidence play out. One more thing. Journal every entry, not the outcome, the decision. Write down what you saw, what you waited for, and what finally crossed your threshold. Do that for 90 days, and you will understand your own trading psychology better than any course will ever teach you. The next time you sit in front of that chart, don't look for signals. Listen for the story. Watch the candles breathe. Watch sellers exhaust. Watch buyers absorb. And wait. Wait for the moment when the story becomes undeniable. When the wick says rejection happened. When the body says conviction arrived. When the close says the verdict is in. And then act. Not from fear, not from urgency, because the market spoke and you understood exactly what it said. That is the art of the entry. And it is a skill, not a talent, which means it can be built by you, Starting with the next trade, progress beats perfection every single time. And the traders who understand that, they're the ones still in this game 5 years from now. If this gave you a new way of seeing the candle, not just reading it, but truly seeing it, subscribe to this channel. Every video adds another layer to a complete system you are building here. You don't want to be missing pieces. And drop a comment below. What's the one entry mistake you keep repeating? The most honest answer gets analyzed in the next video. There's one more thing about the entry I haven't told you yet. The part that makes even confirmed setups fail. That's exactly what the next video covers.